If Bitcoin stays low for months and capital markets stay closed, that risk increases. The real danger is not the volatility or crash that we are seeing today. The real damage is how long prices stay down. Bitcoin recently dropped to 60,000. That's more than 50% down from its October all-time high. And because of this move, two potentially catastrophic things could happen in the market very soon. But before we talk about that, it's important to know why all of this is happening. See, it's not just Bitcoin that's been so volatile right now. Every asset seems to be unstable, from gold, silver, and even some stocks. That tells us a very different story. Normally, when crypto crashes, money flows into gold. When stocks fall, investors hide in safe assets. But in the past week, gold and silver fell from their peak, erasing trillions from the market. This means it's not just rotation, it's actually forced sell-off. And the main reason behind that is liquidity stress, driven by the US Federal Reserve and its policies. The Fed recently stopped draining liquidity from the economic systems, something we call quantitative tightening. At the same time, it started buying short-term treasury bills to keep banks stable. Here's what it looks like in real life. Banks hold treasury bills as safe assets. When the Fed buys those treasury bills, it credits the bank's reserve with cash. That cash sits with the Fed, but it cannot be invested in Bitcoin, gold, or anything, literally. It cannot chase risk. That cash is only meant to be used by the banks for daily withdrawals by the customers, to settle payments, to lend each other overnight, and avoid sudden funding spreads. So, that banks don't collapse. And yes, technically that's the Fed's balance sheet growing, but it's not actually stimulus. This money does not reach the market or the normal people. It does not lower mortgage rates. It does not make investors feel rich. It's more like the Fed doing plumbing work. So banks don't suddenly run out of cash, or they don't overnight freeze lending, or they don't crash. That's why markets are still fearful. Investors are realizing liquidity is tight, risk assets are not being supported, and the Fed is in damage control mode. They're not in a rescue mode. So instead of buying the dip, traders are doing the opposite. They're selling whatever they can sell. Not because they want to, but because cash is king when the Fed forces liquidity stress. Now, if Bitcoin remains weak and volatile for months, two major risks can happen in this scenario. One, a lot of crypto treasuries can go bankrupt. You see, after the latest crash, every major crypto treasury firm is now underwater. Collectively, they're down about 25 billion from their average purchase price. None of them are in profit. Now, being underwater doesn't automatically mean you gotta file for bankruptcy, but it does create some serious pressure. These companies rely on high stock prices, investor confidence, and access to capital markets. If price is low for a long time, some of these companies could be forced to sell assets or dilute shareholders heavily. That's where bankruptcy risk comes up very much. Maybe not today, but over time. Now, let's talk about the biggest name in the room, MicroStrategy. That's what everyone cares about, right? Every Bitcoin holder or everyone who's interested in Bitcoin sees MicroStrategy as this big elephant that can potentially crash the market. Now, that's because MicroStrategy holds over 700,000 Bitcoin. The average price of those Bitcoin purchases is right now around 76,000. So you see, if Bitcoin keeps dropping to 60,000 or stays there for a long time, MicroStrategy is gonna be underwater on paper for a long time. Its stock has fallen sharply over the past month, and more importantly, it's now trading below the value of his Bitcoin. That's a big deal. MicroStrategy's entire strategy depends on one thing: issuing shares above the value of his Bitcoin holdings to buy more Bitcoin. When stocks trade at a discount, that strategy stops working. It's not an immediate collapse because MicroStrategy fairly has raised billions during the bull market at a very favorable term. Its depth is morely long dated, so there's no margin call at 60,000 Bitcoin. It might not mean bankruptcy or collapse for MicroStrategy today, but it's definitely a regime change. MicroStrategy has moved from expansion mode, which it has been for quite a while now, to survival mode, and it's completely new territory for the firm. If Bitcoin stays low for months and capital markets stay closed, that risk increases. The real danger is not the volatility or crash that we are seeing today. The real damage is how long prices stay down, more precisely how long the bear market remains, and whether capital markets reopen. For now, the whole economic system is stressed, and that's why major firms, institutions are underwater, and that's when the risk and trust play becomes more evident. So we're not completely in a crisis mode, but the margin for error in this market is shrinking fast.